Namaste, good morning. We are starting our 64th episode of AAA Weekly Webinar Series. Along with me, Ankit Goel is already there. We would be deliberating and discussing on this recent framework or guidelines issued by Reserve Bank of India on 8th June 2023, which deals with compromise settlements, or we can even call one-time settlements, and also technical write-off by the banks. Now, the issue is very important these days. One, that the banks were presently having the options of one, enforcement of security interest under the SARFAESI Act, two, starting proceedings under the Insolvency and Bankruptcy Code. All the banks were having their own policies regarding one-time settlement, and the focus was a little lesser, and the common guidelines, whatever was issued, was a little older. So to bring focus on the compromise settlement for the purpose of faster recovery, these framework and guidelines were introduced on 8th June 2023. So we'll be deliberating on this. Yes, Ankit.
So good morning, everyone. And I think many of our listeners would be fellow chartered accountants. So wish you a very, very happy CA Day. Today, I think we are celebrating 75 years of the institution being in place for the chartered accountants. And I think it's been a wonderful 75 years. And I think this subject of OTS is something that involves chartered accountants at every stage, maybe at the company level, at professional level. A lot of chartered accountants are helping companies with getting these one-time settlements through. And we are aware today that a lot of banks are going ahead with that route because it's fast and it gives immediate results. And we see that the earlier apprehension of banks where this was seen negatively by the CVC, by other agencies, is now diluted. So I think it's going to be a great session. Looking forward to learning about this new circular and what has changed as compared to the earlier regime that was in place way back in 2007. Over to Anil sir.
So thank you, Ankit. So I think let us start with it, and I would be sharing my PowerPoint presentation. Give me a minute. So that's what we would start. So Ankit, this is called Framework for Compromise Settlements, or one-time settlement is a word which is added by me, and technical write-offs. This is a comprehensive regulatory framework governing compromise settlements or one-time settlements and technical write-offs covering all lenders. The date of issue of this framework is 8th June 2023, and it is effective immediately. No, see, Ankit, this is not something that we are trying to say that this already has actually been implemented, but it is a direction to the regulated entities. Now, what are the regulated entities as per RBI in India? So we have seen, so the regulated entities are public sector banks, commercial banks, small finance bank, local area banks, regional rural banks, primary urban cooperative banks, state cooperative banks, central cooperative banks, all India financial institutions, non-banking financial companies, and also housing finance companies. So these are all categories of banks, NBFCs, cooperative banks, finance companies, which are regulated entities as per RBI. So all of these entities can implement this framework within their organization. So the overall structure will remain the same as provided in the RBI framework. Board of each bank or each cooperative bank or each NBFC will prepare a separate scheme and that will be a policy which will be approved by the board of directors of that particular bank, and then only that would be implemented. More or less similar policies are also implemented. However, earlier circulars were not applicable to cooperative banks. This also would be applicable to cooperative banks. See, this is like, see, there are two separate things. While this particular framework is issued, the RBI has also repealed 3 earlier circulars. One is compromise or negotiated settlements or non-performing assets dated 28th July 1995. This is repealed. Then the guidelines on settlement of non-performing assets obtaining consent degree from court. This was only restricted to now this circular becomes part of the guidelines. Again repealed. Compromise negotiated one-time settlement of non-performing assets dated 21st of June 2010, that is also repealed. But this framework is also referring again and again to the Prudential Framework for Resolution of Stressed Assets dated June 7, 2019. Now this June 7, 2019 is a framework which is applicable to stressed assets, where the stressed assets can be resolved by way of a inter-creditors agreement. And in case those creditors who have signed that agreement approves the resolution plan, that resolution plan will be considered as final and will be applicable to at least those creditors who have signed that inter-creditor agreement. However, there was only one condition in this particular framework, that the borrower entity must have a rating, credit rating of RP4. So that became the difficulty. So this particular framework would not take off. However, within this prudential framework, there are guidelines regarding provisioning of restructured account, guidelines regarding the accounting policies of one-time settlement. Those remains valid. In fact, the entire circular remains valid. But what I'm trying to say is that inter-creditor agreement process of finding a resolution has not taken off. Not many success has been seen, only because of some deficiency, because in case we have the insolvency process where the resolution plans can be approved, and that will be binding on everyone, and that will have a stamp of a court. However, it was not having a stamp of a court, and also in IBC, RP4 rating is not required. Therefore, this circular is valid, but the more important part of this circular is regarding the provisioning and regarding the methodology of one-time settlement or restructuring. So this circular also explains what is restructuring and what is the one-time settlement. Now, we also could understand what are the objectives of these RBI guidelines dated 8th of June 2023. And we could see that this is primarily to rationalize the existing regulatory guidelines to the banks and all the lender entities, and to consolidate various instructions into one. So, in fact, various circulars have been combined into one. And also to tighten some of the related provisions and to ensure greater transparency, because some of the reporting requirements have been provided in this framework only for greater transparency, and also a kind of trend and data that is also made a compulsory scenario in this, so that the country must know how many compromises are being done, what is the trend, and how the people are shifting from IBC or SARFAESI to the one-time settlement or vice versa. So those kind of data preparation has also been provided in this particular regulation framework. Clear regulatory framework also to enable the other regulated entities, like particularly cooperative banks, that they can also kind of have their policies of compromise settlement as a part of normal resolution effort. To provide clear definition of technical write-off, because see, the write-offs do happen, but what happens after the write-off, how the prudential norms would be applicable after the write-off, how the income recognition and asset classification norms would be applicable after the technical write-off. This is also covered in this RBI framework. The concept of cooling period after the compromise, after the settlement, again, there is a concept of cooling period. It is not allowed that today you enter into a one-time settlement and again you give another fresh loan to the same person or to the same group. So then in case of willful default or in case of fraud cases, there are one, it is permitted, not for the first time, because even before also, since we engage ourselves as a group into various one-time settlement proposals, we do provide consultancy for one-time settlement proposals. We have a partner who is dedicated to one-time settlement proposals. So that way we also understand that in the case of willful defaulters, the compromise do happen. In the case of fraud also, the compromise do happen. It is not that it was not happening. It was permitted, but it was not clear. So now the greater transparency have actually been assured in this particular RBI circular, and also to remove the ambiguity, whether the banks can settle with those people who actually are, where the fraudulent activities have been reported to any kind of investigating agency, whether the banks have that kind of power or not. So that clarity is also there, and also to provide further impetus to resolutions of the stressed assets, whatever way. So this is a kind of third resolution option. One resolution option is to enforce the security interest as early as possible. Second resolution of the stressed asset option is to go for insolvency and find a resolution plan. Third, now the one-time settlement or a compromise settlement. Now, when we continue with the, this is something which is, Ankit, I again would need your, whatever you have prepared, you can also provide that input to our audience.
So I think the idea is very clear that I believe that this RBI guideline is giving a lot of freedom to the banks on how they want to structure their OTA, subject to certain checks and balances. So my point is that one, if it is a board approved policy, they have given, said that, okay, that's okay with us. RBI has said that. Secondly, they then talk about how the fraudulent cases or certain cases where there is a bigger problem, it can't be delegated. Because one of the few issues I think that was happening in OTS was that it was increasingly centralized. So now I think the board approved policy will enable even other officers to take a decision on the OTS proposals and take them forward. And of course, with respect to technical write-offs, that's something that again gives a lot of clarity on differentiation between technical write-off and the recovery of those debts. That's also a very, very welcome step.
Very right, very right. So, see, Ankit, now we are now trying to reach out to what kind of board-approved policies are recommended by RBI. So, every regulated entity. So, on the very first slide, we have seen who all are the regulated entities. It also includes NBFCs. It also includes housing finance companies, any kind of bank. It includes cooperative, rural, small, big. All entities are regulated in India by RBI. So all regulated entities can put their policies, board-approved policies on place. Now, the specific guidelines while preparing the board-approved policies are like this. Comprehensively lay down the process to be followed for all compromise settlements and technical write-off. The process has to be defined, where the application will be made, what is the time process for processing the application, whether there is any upfront required or not. So all this process would be defined. Minimum aging. This is again a kind of eligibility. Any bank can say that if a particular account is not NPA, no compromise. Although this particular framework is applicable only to those cases which is NPA. However, some bank can say if the NPA is only 3 months old, we would not go for the one-time settlement. They can say that NPA must be at least 1 year old. Then the deterioration is the collateral value. The second eligibility for considering any compromise settlement or one-time settlement, that can be that there is a reported deterioration in the collateral value. So in case there is no reported deterioration in the collateral value, why the bank should compromise? Why the lender should give any waiver? Why the lender should give any discount on the interest? Because the collateral security is available and that kind of security margin is available. So in case the security margin is available, the value of the collateral security has not deteriorated. That means no compromise required. So that can also be part of the board policy. See, it is also mentioned that in the policy, the staff accountability must be seen. And that can be like who got it valued, then who was monitoring it, then what are the reasons for the stress. All this, in case a staff is responsible, that also should be in the policy. Reasonable threshold. Now, the reasonable threshold can be like we will not do any settlement unless the total loan outstanding is say 10 lakhs, or we will not do settlement unless the total loan outstanding is more than 100 crore. So there can be kind of reasonable threshold. That is also eligibility to make a particular case eligible for compromise settlement. So the timeline for the sanction, as I said, the board must define the process, that what is the timeline for the process, application to sanction. However, the timeline, it is very, very specifically provided that any compromise, if sanctioned by the bank, where the repayment is proposed beyond 3 months, that would not be considered one-time settlement, that would be considered as restructuring. And in the case of restructuring, the prudential norms for stressed assets dated 7th of June 2019 would be applicable. So then the board also will see what is the kind of permissible sacrifice for various categories of exposure. So the categories of the exposure can be home loan, it can be equipment loan, it can be agriculture loan, it can be MSME, it can be so there can be various categories of the exposures of a bank, and the bank can provide guidelines to their officials regarding the what kind of permissible sacrifice are possible. So the bank can say, in the case of car loans, we can only go up to 20%. In the case of home loans, they can only go 10%. In the case of working capital finance, where the possibilities of deterioration in the value of security interest is very high, the bank can say in this policy that they can go up to something like permissible sacrifice, maybe 50%. So that's the kind of thought process which the bank board has to apply when they actually will frame their policies. Now, of course, how the market value or the realizable value of the property would be reckoned, what would be the methodology of arriving at the reasonable value, whether it would be one valuer, whether it would be two valuer, whether the valuer would be appointed by the bank, who will bear the cost of the valuer. So all that has to be defined in the policy, and whether it will be registered valuer as per IBBI or it will be the registered valuer as per the income tax registration. So objective shall be only and only to maximize the recovery. That is what is the RBI guidelines. So there is no social objective into it. There is no kind of support to the entrepreneurs. It is options, option 1, option 2, option 3. And this is the best option. The bank will recover the most in this option. So that is the option that the bank has been told by the RBI to take. So then the actual various, what kind of contractual provisions would be required between the lenders and the borrowers relating to the future contingent realizations. Now, today I may say that I am in stress because my payment from NHAI is stuck up for the last 2 years. I somehow want to settle down my existing loan, and whenever my NHAI arbitration would be settled, whatever I would get, I would be paying something contingent to the bank as well. So the whatever the bank has taken as a waiver or as a loss, some part of that loss can be covered out of my future contingent asset or contingent recoveries. That also can be made part of the policy, and that can also be made as part of their contractual agreements. So the lenders are saying no need to recognize on the balance sheet of the lenders, because see, these, again, the RBI says that in case you have any such contingent asset as per the agreement between the borrower and the lender, that you don't need to recognize in the balance sheet. If such claims are recognized by lenders in its balance sheet, the arrangement shall be considered as restructuring and not OTS. Now, if somebody says that although I am settling with, say, 50 crores, however, I also will need 15% equity into your company. So that's a part of the one-time settlement. So that's a contingent asset, which I will not be able to sell till the time you become listed. So that also can be a contingent asset. But the RBI says that you don't have to recognize in your balance sheet, in the lender's balance sheet. If you recognize, then it will become a restructuring proposal and not one-time settlement. And when it becomes a restructuring proposal, then the income recognition, asset classification, prudential norms, as per the RBI framework dated 7th June 2019 would be applicable. So any clarity which is required in this? And there are some questions also.
So I can take up the questions. Now, one of the questions is that anything for valuers. So I think the answer to that would be that whenever a bank goes for a compromise settlement or one-time settlement, if that threshold gets crossed where the bank needs a fresh valuation to give a basis to their decision that they're getting this value and the value of the assets available with them are, these, then it kind of gives them a basis to go for the OTS settlement. So of course there is a opportunity for valuers, not only for land and building, plant and machinery, but also for maybe other assets like shares which are pledged with some banks. There may be some ownership of certain assets with personal guarantors as per the net worth statement that is available with the bank. So that might be valued by the bank through the valuers. So that I think is important. Anything else that you feel, any opportunities for valuers?
No, I think the opportunity for valuers is the board will not, if the one-time settlement framework become popular, then the valuers will definitely get another opportunity to value the assets, value the primary security and the collateral security both. Then only the bank will be able to take a decision on one-time settlement. So empanelment with the banks is very important, because this work will go to only those people who are empaneled with the bank. Maybe the cost is borne by the borrower or the cost is borne by the bank, but the work only will be given to those people who are empaneled. So that definitely this is a third opportunity. One opportunity is when this, see, like, of course, there are many opportunities. I'm only talking about the opportunities under stressed assets. One opportunity is then when we take over a property and then we try to sell it. Before sale, there has to be a valuation for determination of the reserve price. In the case of insolvency, also there are two valuations are required. In the case of liquidation, also there are valuations required for the purpose of secured as a reserve price. So this is a third opportunity in the stressed assets where the valuation is required even for one-time settlement.
Right. So then we have a question from Mr. Maheshwari. And he says that how staff accountability will be determined when loan is sanctioned by higher authority board. Generally in big loans, NPA is more than small loans, which is sanctioned by higher authority.
So even if the loan is sanctioned by the higher authorities, there are many things which are delegated down to the operational officials. Like, for example, inspection of the assets. Number 2, inspection of collateral security. Number 3, inspection of primary security. Number 4, assuring all the financial statements are verified. So these are the basic processes. If there is a flaw found in these basic processes, and whatever report has been submitted to the sanctioning authority, that particular report is wrong, that means that somebody has compromised. So therefore, even if the sanction has been done by a board of directors or a committee or a senior functionary, the person who is submitting the report, it is his duty to go and see whether the property is owned by this person or it is not owned, whether the property is given on rent before the like there are many cases where the property is given on rent for the next 9 years and it is valued at a very high value, and when we go to the bank for getting a loan, then the rights of the lessee is protected and the bank is not able to even enforce their security interest because the tenant is already staying there and the rent is even much less than the market value. So what you would be able to do that because already the tenant is there. So that's a fraud case, because see, the valuation has been done as if it's a property which is free and like occupied by the owner. If it is bona fide tenant and the property has been given to the bank as a collateral security, then every court will protect the bona fide tenant. So therefore, this is a fraud. This is a non-compliance by the junior staff. So there are many things where the responsibilities are divided between the appraisal officer and between the sanctioning authority. Is okay?
Yeah. Then the next question is, would there be any, okay, the question is, can you please elaborate the equity in the NPAs being a contingent condition? I think there was a mention about this. So that's how this question is coming.
Yes, I mentioned this because see, there are many cases in the case of even resolution plans also, you would see under the insolvency that the bankers are saying, although we are taking a very, very high cut, but since the company is being revived, we will also take equity in your shares. Similarly, in the one-time settlements, when a promoter comes that I am continuing, I have an investor, and that investor wants that I should actually have, I should have the free, I should not have any charge on my assets. So that investor is ready to give me, say, 30 crores. I have an outstanding of 50 crores, and the value of my securities are only, say, 15 crores. So this is an opportunity for me to give you 20 crores or 22 crores in case the bank can enter into a settlement with me that actually will revive my unit. It is a one-time settlement. Then the bank in those cases can certainly say, since you are reviving along with an investor, we also would need some share in your growth. And that can be the equity participation, where the settlement is being done not to close the business. Settlement is being done to revive the business.
Then the next question is from Mr. Vijay. He says, even if there is no deterioration of assets as said by Mr. Goel, bank can go for compromise to maximize profit by decreasing provision.
No, I'm saying, like, let us understand what is the method of financing. The bank will not finance unless there is a appropriate security margin. So what is the security margin? Security margin is that if I have a property having a value of 100 and I will give loan of may 75 or 80 or even 70 or 60. So that means the 100 minus the loan, that is a security margin. So my value of the property was originally 100. So my security margin can be 20, 25, 30, 40. In case the security value is not deteriorated, that means my security margin is available. And in case my security margin is available and it is possible for me to enforce my security interest, then there would not be any compromise. There will not be any one-time settlement. There is no reason that the bank will give any discount, because the bank has full security margin.
Okay. Okay, let's proceed.
Okay. So now, meaning of the compromise settlement or one-time settlement. any negotiated arrangement with the borrower to fully settle the claim in cash. Fully settle the claim in cash is the first condition, which may entail some sacrifice of the amount due and corresponding waiver of the lender's claim. So there is a difference between restructuring and one-time settlement. One-time settlement, they are saying it is only in cash. Maybe out of the sale of the property, or out of the sale of the primary security or a collateral security, or any other source. As I have given an example of an investor coming in, that can also be a source for one-time settlement. Now, there are many funds. There are many funds which are operational in India. Earlier, it was only asset reconstruction companies like ARCs. Now there are many alternate investment funds, which is called special situation alternate investment funds. Now these are the funds, they are ready to fund the one-time settlement amount. They are saying, we will do the due diligence. Now we understand that the total loan is 100. However, this particular business is viable in case the bank settles at 30 and the collateral security is also less than 30. Now the fund says that if the bank is settled at 30, promoter also brings some investor, we are ready to fund the one-time settlement partly. These are various funds, although their interest rate is very high, but they are funding the one-time settlements also. So this can be a new route. First, try to settle with the bank, then arrange the funding based on the viability of the business. So the business can continue, investor can come, and the alternate investment fund also can come. So the business can also get rid of all these liabilities, and high debt, or which is not possible to service, can be brought down to serviceable debt. So this is where I'm talking about the new era, the new opportunity in one-time settlement processes. In the meantime, Ankit, we want to talk about technical write-off. Although this is only for banks, this is only for the internal consumption of a banker, the borrower is not impacted with this. It is only a clarification of technical write-off. Now, what is technical write-off by bank? Where the NPA remains outstanding at a borrower's loan account level. Now, when the NPA, when the account becomes NPA, the outstanding balance was 100, and it continues. And after that, once the account is declared as NPA, the income recognition and the asset classification as per the prudential norms, circular dated 7th June 2019 would be applicable. So provisioning and all that would be applicable. Then in case of any write-off, which the bank may decide, maybe fully or partly by the lender, only for accounting purposes. Now, why this write-off is required? So there are two ways, there are two options with the bank. One, that the bank can go for provisions. The bank can make provision of, say, 20%, 30%, 40%, 50% of the total NPA outstanding based on the RBI circular, depending upon the total age of the NPA account, and also to some extent some kind of government guarantees or some kind of securities. But then the securities are not relevant. In case the NPA is 1 year old, then different provision, 2 year old, different provision, 3 year old, different provision. However, the bank can decide that I am sure that this particular amount is not recoverable. So I just want to reduce my NPA provisions. So I will write off 50% of these loans. So they can write off 50% of these loans in their balance sheet, and the balance 50% will be shown in the provision. Or alternatively, the bank can say that if I have provided, say, like if I have only, I will leave the provision for only 1 year old NPAs, and beyond 1 year, I will write off everything to clean up my balance sheet. Because my balance sheet is, bank can think that my balance sheet is now being seen by the international investors. I am opting for a very big public issue. So therefore, I just want that my balance sheet should be very clean. I don't want to show that my provisions to loan, I don't want to show that my provisions to loan is 20%. I just want to show my provisions to total loan is only 3% or 2%. So therefore, the balance I can write off without involving any waiver, because see, this write-off does not impact the lender's right to recover. This write-off does not give any waiver to the borrower. I think, Ankit, you are clearly understanding it. What exactly this technical write-off is?
Yes.
Anything which is coming in your mind, please share.
Not really. We can proceed. Yes.
Okay. Now, in this particular circular, even the delegation of powers has also been provided very clearly, that who would be the sanctioning authority for sanction of one-time settlement or compromise settlement. Now, this policy for compromise settlement and technical write-off, it should be very clear in the board approved policies. It is also very clear that in case a compromise settlement is being undertaken for a fraud or a willful defaulter, then it would require approval of board in all cases. In all cases, it will require approval of board of that particular regulated entity. However, for a normal sanction of OTS, it would be at least one level higher than the authority who is actually delegated to sanction that kind of loan or that amount of loan. Now, suppose if a particular loan NPA is, or total NPA is 50 crores, and there is a compromise proposal for that 50 crores. So any authority which is presently authorized to sanction a loan up to 50 crores, one level higher would be required for such compromise. And it is very clear that if a person was involved in sanction of that particular loan, which is presently being considered for compromise or one-time settlement, would not be participating into the approval of one-time settlement. Now, the compromise settlement versus restructuring, what is the kind of prudential treatment, Ankit? So the compromise settlement is where the time for payment of the agreed settlement amount exceeds 3 months shall be treated as restructuring. If the time for payment is only 3 months, then it is a compromise settlement. Otherwise, it will be considered as restructuring. In case it is exceeds by 3 months, then it will be considered as restructuring, and Prudential Framework for Resolution of Stressed Assets dated June 7, 2019 and Prudential Norms for Asset Classification and Income Recognition would be applicable. Now, in case of partial technical write-off, the prudential requirement in respect of the residual exposure would be applicable. Now, this is also very important to say that in case we technically write off 50% of the NPA amount, on the balance 50%, these norms of provisioning norms would be applicable considering the overall original position. If the original position is that the total OTS, the total amount is 4 years old, and then 100% provisioning is required. So by just writing off, the bank would not be able to manipulate the provisioning requirement for the balance, which is still being considered as a provision. So that is also very clear in this matter. Now, the important part is reporting mechanism and oversight by the board. This also will become part of the board approved policy by each bank. The reporting mechanism to a next higher authority, at least on a quarterly basis. So any such compromise, it has to be reported to at least on a quarterly basis. Any technical write-off which is approved by the MD or the CEO or the committee that will be reported to the board of directors. The format of the reporting, that has to be assured in the board approved policies. And in that format, there should be a provision for understanding the trend in number of accounts, in the total amount subjected to OTS or technical write-off, what was in the last quarter, what is in this quarter, what was in the last year, what is in this year. So that kind of data collection is now required so that the bank can understand how our compromise policy is being used and what is the trend in the market. Now, there is a separate breakup also would be required in that reporting format. How many red flagged accounts were compromised? How many willful defaulters were compromised? How many early mortality or quick mortality cases were there? How many fraud cases were actually were settled? What is the kind of average amount of the cases where it is settled? Sanctioning authority, which sanctioning authority is most active in approval of the OTS? What is the business segment, whether it is an agriculture, whether it's a home loan, whether it's a vehicle loan, whether it's a unsecured loan, which loan segment actually have gone bad and where the compromise is coming as a handy tool. Asset-wise also grouping. Asset-wise grouping in such accounts, like as I said, there are many classes of the assets. So that can be working capital, term loan, that can be home loan. So that asset-wise grouping also, and even the extent of recovery in the write-off accounts. So this is a reporting format that the banks will come up. We understand that the banks will take about a month's time in coming out with all these board-approved policies, and then the work will start. But this is a broader RBI guideline under which the banks will prepare, and all earlier circular, all earlier directions are being consolidated in this. Now, the cooling period after the settlement, there is also a provision for the cooling period. In the board-approved policies, there should be a cooling period. It should not be a case that today we have today we have taken a loss and tomorrow we can again give loan to that person. So the minimum cooling period of 12 months is recommended, and that is recommended for other than farm credit. Farm means agriculture credit. However, the bank is free to have even more cooling period, more than 12 months. It is also provided that the cooling period for the agriculture loan or the farm credit should also be provided, and this can be even less than 12 months. So this cooling period will actually help in kind of cooling period will help us in some deterrent that if I go for this kind of compromise, I will not be able to take another loan for some time. Now, we do want to take any questions now, or we should?
There is one question, that is this guideline applicable to ARCs?
No, the ARCs are not considered to be as lenders. ARCs are not considered as lenders. ARCs are, in India, the ARCs are only for acquiring assets under SARFAESI Act and then reviving them or realizing them. But the ARCs are not in the business of lending.
So ARCs can have their own policy with respect to OTS, irrespective of what these guidelines say.
Yes, yes.
These would also perhaps at some point in time either restructure the asset or go for a compromise with the promoters. So that is possible.
Even the ARC is funding. The ARC is funding on certain conditions. One, that the ARC has taken the assignment of the loan. Second, ARC thinks that with this kind of funding, the unit will be revived. And after the revival, they will be able to sell the unit. So that is the funding which the ARCs are permitted to give to the companies.
Right. Then there is a question that partial OTS can be done. I don't think there's anything called.
There is nothing like partial OTS. Partial write-off. I said partial write-off.
Yeah,
now the bank can. I gave an example that total 100 keeping in the provision, or out of the 100, the bank can write off 50 and keep balance 50 in their balance sheet as provision for bad and doubtful debts or provision for NPAs. All
right, let's proceed.
Okay, now I think we'll talk about the treatment of accounts categorized as fraud or willful defaulter. Now, the lenders may undertake compromise settlements or OTS in respect of accounts categorized as willful defaulters or fraud. They can also do technical write-off in all these cases. Such compromise or technical write-off shall be without any prejudice to criminal proceedings underway against such borrowers. Now, the criminal proceedings can be started before the settlement, or it can be started even after the settlement. But once the settlement is done for the financial part of it, the banks will not be able to say that we have also waived our rights to go ahead and take action against any of the acts like filing complaint before the CBI or like PMLA, all that. Now, see, like, although this part of the slide is not from this framework, but since we are discussing about willful default, so I thought that it is better that I should take out the earlier circulars of RBI to make my audience understand what is willful default. Now, the willful default has been defined in RBI circulars. One, that the borrower is defaulting even if it has a capacity to honor. That's a first condition. So the second condition is the borrowers have diverted the funds to another purpose, and that purpose was not the purpose for which the loan was taken. So the borrower has taken a loan for working capital, and the borrower has diverted it to another business, to a subsidiary company, to investing in shares, or to investing in foreign exchange. So that's a diversion. Then the other is siphoning of the funds. Now, the siphoning of the funds and the diversion funds is very important. One, that the siphoning of the fund is, so the funds have not been utilized. One, that the funds have not been utilized for the specific purpose for which it was borrowed. And the secondly, even the funds are not available in that unit for which the loan was taken. So now it has gone to another company or wherever it has gone, but that's a siphoning of the funds. And then the fourth circumstances where the movable or immovable properties of the company has been disposed of, or it has been removed without the knowledge or without the NOC from the bank. Then any misrepresentation, falsification of accounts and fraudulent transactions. So these can be, misrepresentation can be filing stock statements which are incorrect, and making balance sheets which are rosy. That's a misrepresentation, falsification, and also entering into some kind of fraudulent transactions. And the fraudulent transactions can be artificially increasing the sales, artificially increasing the price of the assets. So these are all, in case the bank finds all this, then bank can declare a particular borrower as willful defaulter. So as per that circular, what are the penal measures which a willful defaulter will be subject to? No additional facilities can be given to the willful defaulters. When the siphoning or diversion of funds or the misrepresentation is seen, then the institutional finance from the scheduled commercial bank, financial institution, NBFCs also would not be available. Then this particular person, the willful defaulter, would not be able to float a new venture for a period of 5 years from the date of removal of their name from the list of willful defaulters as published or disseminated by RBI. So this 5 years period, even after their name is removed, after it is settled, that also would be penal provision. Then the legal process against the recovery should be initiated. That's what is the guidelines, that wherever the foreclosure of the recovery should be immediately started. Criminal proceedings against the willful defaulters also immediately should be started. And the bank can also think something where the management can be changed to save the unit. Management can be saved to save the units. And also the banks have been guided in that this circular of RBI that their agreement of loan should be in such a manner that in case that any borrower who actually have taken a loan from the bank will not add any director or any partner who is appearing in the list of willful defaulters, and also for whom even after the amount is a name is removed, for the next 5 years, they would not be able to add that person into the business as partner. So the last is, Ankit, the classification of frauds, because there is a separate circular for willful defaulters, and there is a separate circular of RBI for classification of frauds. Now, when we read this classification of fraud circular, this is applicable to the borrowers, any other person who deals with the bank, and also the staff, the frauds committed by staff of the bank. Now, this is the first part is misappropriation and criminal breach of trust. This can be applicable to a borrower or any staff also. Fraudulent encashment through forged instruments, manipulation of the account through fictitious accounts, and conversion of property. This is also possible to staff as well as to any other person, maybe a borrower, even other than borrowers. Unauthorized credit facilities, this is applicable to borrower and to only staff. Negligence and cash shortages only to staff. Cheating and forgery, this is applicable to both as far as the borrower or staff also. Irregularities in foreign exchange transaction, this is applicable to both. So these are the definitions of fraud. Now, Ankit, in this circular, RBI circular, there are two different categories where the frauds can be reported. So there is a different authorities where the frauds can be reported. One, in case the fraud is by an employee, then different authorities. If the fraud is by a public sector bank, different authority. And in case the fraud is in a private sector bank, it is different. So when a private sector bank, they can find a fraud of 1 crore and above, they can only approach to state police or the SFIO of Ministry of Corporate Affairs. Then for the public sector banks, in case the fraud, I'm not talking about the fraud by the employees, I'm only talking about the fraud by the borrowers. Public sector banks, if the fraud is more than 3 crores and up to 25 crores, then the bank can report to anti-corruption branch of CBI, where the staff involvement is prima facie evident, or economic offense wing of the CBI, where the staff involvement is prima facie not evident. Then, because the anti-corruption is because the staff is involvement, otherwise the economic offense wing of the CBI. Then in case the fraud is between 25 crores and 50 crores, then it is a banking security and fraud cell of CBI. And then if it is more than 50 crore, then it is joint director policy CBI. So these are the fraud kind of definitions. So like when somebody was asking why this kind of willful defaulters and fraud accounts are also now allowed for the settlement. So then the RBI clarified that the RBI has advised the Indian Banking Associations via their letter dated 10th of May 2007 that the bank may enter into compromise settlement with willful defaulters and the fraudulent borrowers without prejudice to criminal proceedings. So that was also, it was advised to IBA. So now that particular scenario was also consolidated in this framework. Then RBI said that even in 2015, they had actually said in a master circular that which is the willful defaulters master circular, the lenders agreeing to compromise settlement with borrower classified as willful defaulters and state that such case need to be reported to credit information company provided inter alia that the borrower has fully paid the compromised amount. The master directions in July 1, 2016 also provides for compromise settlement with the borrower classified as fraud, subject to condition that no compromise settlement involving a fraudulent borrower is allowed unless the conditions stipulated that the criminal complaint will be continued. So the RBI clarified that these are the earlier circular where even it was allowed to enter into a compromise settlement with willful defaulters and fraud accounts. Then if someone asks RBI, like what is the rationale for even the fraud and the willful defaulters bringing into the settlement framework, so they clarified that to enable multiple avenues to the lender to recover their money, and also to check time value of the money loss, because the time value of the money is very, very important. Also, RBI explained that there's a huge delay in all those cases where the fraud or willful defaulters are there. And in this case, the security value is deteriorating and the funds of the lenders are blocked and the early recovery is the objective. And also that criminal proceedings will continue. No one-time settlement will somehow save the borrower from criminal proceedings. And so also RBI says that there are some safeguards that we have assured that the decision will be taken by the board, and also the regulatory compliances would be ensured and the criminal proceedings will continue. So these are various safeguards, and which and also it is said that in case of any kind of litigation or any application, any kind of DRT application or insolvency application is already pending, then the consent decree would be obtained from that court immediately after the settlement is done. So also the board of the bank will see the overall trend in the approvals of compromise settlement with specialized reporting on red flagging account, fraud account, willful defaulter, or the quick mortality account. So these guidelines will ensure greater transparency. So like the legal provisions are very clear that one, that no compromise on the criminal part of it. And secondly, the bank has no power to settle at any existing litigation. That has to be settled by the relevant court by way of a consent decree. So this is what is, Ankit, for today from our side. Now I think we can see the questions are there, so we can attend to these questions.
So one of the questions is an interesting one. Say a promoter goes into OTS with the bank, and subsequently that OTS is also completed. Is there any restriction under 29A of IBC for that person or for that promoter to become an RA in another company once the OTS settlement is through?
No, there is no such so far.
Because the NPA, because I would say the NPA status ceases once the OTS is completed.
Once the OTS is concluded, amount is paid. As on that date, there is no default.
Yeah. However, so rather in 29A, there is also that provision that in case somebody can correct their default, then also they become eligible as an RA, right? That was also something that decreed in
that is probably the reason that the same banks are not giving loan, because they actually have suffered through the resolution plan. But as far as the 29A is concerned, 29A provisions are very clear that there should not be an existing NPA. And if the amount is settled, that is not NPA. And then the cooling period, as we have seen in this, that as of now, cooling period is not applicable to insolvency cases and the person can become RA.
So then the second question, this is which can be an interpretation, is that say somebody is doing multiple banking and they have NPAs in different banks. Now there, one of the points raised by Mr. Rathi is that even in case the promoter settles with one bank or two banks and one bank remains where the NPA still stands, the cooling off period will not be effectively available from the banks where the settlement is complete, because the NPA status will still show up on the civil records and any fresh loan facilities won't be available to that company or to that promoter group till the time NPA is going on in one of the banks. So in the case of multiple banking, then it becomes important for the promoter to do an OTS with all the banks. Otherwise, then the fresh facilities may not be available.
So the first thing is that this particular cooling period condition is applicable to that particular bank. Now there is no bank in India which actually can say that you have one NPA in your balance sheet and still I can give you loan.
Yeah.
So that's another hurdle.
So effectively, the cooling period will not be not be effective or will not be effectively available.
Yes.
Then one of the questions is that what is your opinion on how will this impact SARFAESI and IBC? As you know, these are of course questions from professionals who are in that space and who are asking that will SARFAESI and IBC related assignments decrease or will remain the same because of this new guideline Do you foresee a decrease in the availability or in the thought process of the bank that they want to proceed with SARFAESI or IBC?
So I believe this OTS process was available almost in all banks in India. It was continuing even during SARFAESI. It was continuing during IBC also. Even today we see, even after filing an application, there is some kind of arrangement, and that can be considered as a restructuring arrangement. So there is nothing new in this process. The only thing is that the entire framework, all the earlier circulars have been actually consolidated, and there is more like focus on this one-time settlement. And the RBI now will tell every bank that within a stipulated period, they should also be out with their board approved policies. So once the board approved policies are very clear, where even the formats for reporting, format for application, time period for application, everything is mentioned, then more the functionaries of the bank will be active in handling the one-time settlements. And there will also be a, like kind of monitoring of the time frame. So if that is done, I believe some OTS numbers will increase, and it will only increase in those cases where the borrower is ready to pay within 3 months. Whereas in insolvency, it's a totally scenario different where the borrower is not able to pay. In SARFAESI also, it's a security interest that has to be encashed. But I don't foresee that there will be any impact on the SARFAESI or IBC. This is another way. It was available in a different manner. Now it is available in a little crystallized and clear manner. So still, I don't feel that there will be any impact on the insolvency practice.
So apart from that, so I think that's about it. I don't think I'm missing out any question. Yep.
So I think it's like great attendance today. We are very happy when more and more people attend. So thank you very much. And we again will come back for our 65th continuous AAA weekly webinar series episode next Saturday at 11 a.m. Thank you very much.
Thank you, everyone. And it was amazing to see so many questions coming in on this subject. I tried answering as many. So we've answered, I think, more than 30 questions today. But I'm still having 12 which are open. So I think we can always, we'll have to always take up a few questions and leave a few. Thank you, everyone. Thank you so much.
Thank you.